Yield is a fundamental concept in finance that tells you how much money an investment earns relative to its price. Simply put, yield represents the income return on an investment, usually expressed as a percentage over a one-year period. To calculate yield, you divide the annual income the asset generates by its current market price. Yield helps investors compare apples to apples when looking at different income-producing assets like stocks, bonds, or savings accounts. There is an inverse relationship between price and yield. As the price of an asset increases, the percentage yield typically goes down. Different assets offer different yields based on risk and market conditions. Generally, higher yields may indicate higher risk levels. Remember that yield only counts the cash you receive, not the change in the value of the asset itself. Thanks for watching. This video is for educational content, not financial advice. Please consult a professional before making any investment decisions.